Imagine waking up on an ordinary Tuesday morning, sitting down with your cup of tea, and trying to pay your electricity bill the exact same way you have paid it for the past 5 years. Same bank, same account, same routine. And this time, for no reason you can see or understand, the transaction is declined. Your card is not expired. Your account has money in it. You have done absolutely nothing wrong. But your bank has quietly blocked you from accessing your own funds. And nobody sent you a letter, nobody called you, and nobody can fully explain why. This is not a story from 10 years ago. This is happening to thousands of Australian pensioners right now in August 2026. And the most alarming part is that most of the people it is happening to have no idea until the moment they are standing at a pharmacy counter with a declined card and a queue of people watching. Stay with me, because what you are about to learn could protect you before this happens to you. Welcome to the channel, and if you are new here, I am genuinely glad you found this video today. This channel exists for one straightforward reason: to stand firmly in your corner and make sure you always know your rights, your options, and the practical steps you can take to protect yourself and your money. Every week, this channel covers the issues that actually affect your daily life as an Australian retiree or pensioner. The issues your bank will never explain in a text message, the policy shifts that never make the evening news, and the quiet changes that can have a very loud impact on your financial security and peace of mind. Today, we are going deep on something that has been building across the Australian banking system for months and is now hitting pensioners in a very real and very distressing way. We are going to cover exactly what is happening and why, which accounts are most at risk right now, the legal detail that most people find genuinely shocking, and 3 specific practical steps you must take.
Immediately to protect yourself. Do not skip ahead. Every section of this video matters. Let us start with the full picture, because understanding why this is happening is just as important as knowing what to do about it. Over the past several years, Australia has experienced a wave of scam losses that cost consumers billions of dollars. The scale of the problem forced government to apply serious pressure on financial institutions to do more, act faster, and take greater responsibility for protecting their customers from fraud. The response from the major banks was to introduce and significantly expand what are called transaction monitoring algorithms. These are automated systems running continuously in the background of every major bank in Australia. They scan your account activity in real time, analyzing your spending patterns, your transfer amounts, your payees, and the timing of your transactions. When the system detects a pattern that resembles known scam or fraud behavior, it acts. It blocks the transaction. In more serious cases, it restricts or freezes the entire account while a review is conducted. On paper, this sounds like exactly the kind of protection every customer should want, and in some genuine fraud cases, these systems are working precisely as intended. But here is the problem that almost nobody in a position of authority is talking about loudly enough. These algorithms were built and calibrated around the financial behavior of working-age adults. The engineers who designed them studied the spending patterns of people in their 30s, 40s, and 50s. They were never properly adjusted to account for the entirely different and entirely legitimate way that pensioners and retirees manage their money day to day. The result is a system that frequently misreads completely normal pensioner behavior as suspicious activity. A transfer of a larger than usual amount to an adult child is flagged. Several smaller cash withdrawals made over a short period, perhaps for gifts or household help, are flagged. A payment to a tradesperson followed later by an online transfer referencing a similar amount is flagged. The algorithm does not understand context. It sees a pattern it was not programmed to expect from this account, and it acts accordingly. A perfectly honest person suddenly cannot access their own money. This is not a minor inconvenience that resolves itself in a few minutes with a quick phone call. When an account is flagged under these systems, banks are in some cases freezing or restricting entire accounts while an internal review process runs its course. That review can take days. Think about what that actually means in practice. You cannot pay for your prescriptions. You cannot cover your weekly grocery shop. You cannot transfer money to a family member who is waiting on funds you promised. You cannot pay a utility bill before the due date. Every essential financial function of your daily life comes to a halt, and you did nothing wrong. A pensioner in regional Victoria, a woman who had banked with the same institution for decades and followed exactly the same financial routine for years, experienced this firsthand. She sat down one morning to pay her electricity bill online, and the transaction was declined.
After 2 hours on hold, she finally reached a bank employee who could not fully explain what had triggered the restriction or how long it would last. She is not an isolated case. This story is repeating itself in homes across Australia right now. Here is the part of this situation that most people, when they hear it for the first time, find almost impossible to believe. You might reasonably assume that if your bank restricts your account, they are legally required to notify you immediately. That seems like a basic consumer right. The reality under certain anti-fraud and anti-money laundering regulations is more complicated and significantly less reassuring. Banks operate under laws
that were designed to prevent criminals from moving money to safety the moment they realize their account is under investigation. Part of that legal framework gives financial institutions a window during which they are permitted to restrict access to an account and delay notifying the account holder. The intent of that provision was entirely reasonable. Its unintended consequence is that honest pensioners can find themselves completely unable to access their funds, with no explanation arriving for a legally permitted period of time. You can be locked out of your own account, struggling to understand why, while the bank is technically operating within the law by not telling you. That is the reality of the regulatory environment in August 2026, and it is why waiting for your bank to warn you is not a protection strategy. Based on the consistent pattern that has emerged over recent months, certain types of accounts and certain types of account changes are triggering these reviews far more frequently than others. If you have recently moved to a new address and updated your personal details with your bank, that change alone can trigger an automated review. The system sees a shift in your profile and treats your account as requiring closer scrutiny. If you have recently begun receiving payments from a new source, whether that is a family member helping with living costs, a new Centrelink supplement, or any income stream that did not previously appear in your account history, that new pattern can flag your account for review. If you recently made the transition from branch banking to online or app-based banking, something millions of Australians did during and after the pandemic years, your account may now be treated by the algorithm as a new behavioral profile. Your historical spending pattern is essentially invisible to the system in its new format, which can cause ordinary transactions to appear anomalous. If any of these situations apply to you, your account carries a higher than average risk of being flagged under current monitoring systems, and taking proactive steps now is considerably easier than trying to resolve a restriction after the fact. Let us move to the most important part of this video, the specific actions you can take today to protect yourself. The first step is to call your bank directly, not a message through the app, not an email, a phone call where you speak to an actual person. Ask them clearly and directly whether your account currently has any flags, restrictions, or monitoring alerts attached to it. You have every right to ask this question and every right to receive an answer. Use these specific words when you ask. Ask about your account restriction status and whether any transaction monitoring flags have been applied. Write down the name of the person you speak to, the date and time of the call, and exactly what they tell you. If something is already in place, you want a documented record of that conversation starting from today. The second step is to open a small backup account at a separate financial institution. This does not need to be a large account. $500 to $1,000 held quietly in a credit union or a second bank gives you an essential financial safety net. If your primary account is ever frozen or restricted, you are not completely stranded. You can cover medications, groceries, and urgent bills while the situation with your main bank is resolved. This is not about distrust of your bank. It is about having a lifeboat in place before you ever need it. Every financially prepared household should have one. The third step is to bring one trusted family member or close friend into your basic financial picture. Not your PIN, not your passwords, but they should know which banks you use, where your important financial documents are kept, and who to contact on your behalf if you suddenly find yourself unable to access funds. This is called a financial contingency plan,
and the vast majority of families do not create one until a crisis makes them wish they had done it years earlier. Have that conversation this week. If your bank has restricted your account and you believe the action was unjustified, you have a formal and powerful avenue available to you that far too few people know about. The Australian Financial Complaints Authority, known as AFCA, is a free and completely independent complaint service. Banks are legally obligated to respond to AFCA inquiries and to participate in their resolution process. This is not a symbolic body with no real authority. AFCA has successfully required banks to reverse account restrictions and to compensate customers for financial losses caused by wrongful account actions. If you have been affected, lodge a complaint.
Do not be discouraged by the size or reputation of the institution involved. Your rights as a customer exist regardless of how large your bank is, and AFCA exists specifically to enforce those rights on your behalf. It is also worth knowing that the federal government is currently reviewing how anti-fraud consumer protection measures are being balanced against the access rights of vulnerable Australians. Parliamentary submissions specifically addressing the impact of automated monitoring systems on elderly customers have already been made. Change is coming, but policy moves slowly. The protection you need today cannot wait for a legislative review that may take months or years to produce results. Every Australian who has worked hard, paid taxes, and built a retirement deserves to be treated with dignity by their bank. The fact that protective technology is being deployed in a way that routinely traps the most financially vulnerable people in our community is not acceptable. The more openly we discuss it, the more pressure builds for the calibration of these systems to actually reflect how pensioners live and spend. Here is your action list for today. Call your bank and ask
directly about your account restriction status and any transaction monitoring flags. Set up a small backup account at a second institution as your financial safety net. Bring one trusted person into your basic financial picture so they can act on your behalf if needed. And if you have already experienced an unjustified restriction, lodge a formal complaint with AFCA and use the rights you are legally entitled to. Do not put these steps off until next week. The pensioners being affected by this right now did not expect it either. Preparation is the only reliable protection. If this video helped you today, please give it a like and share it with someone you care about. A parent, a neighbor, a friend from your local community, anyone who banks in Australia and might not realize this is happening. You could genuinely spare someone a frightening and deeply stressful experience. Drop a comment below and let us know which bank you use and whether you have ever had a transaction unexpectedly blocked. Your experience helps others know what to watch for. Subscribe and turn on the notification bell so you never miss a weekly update covering the issues that truly affect your money, your rights, and your peace of mind as an Australian. Take care of yourselves and each other, and we will see you